You're tuned in to Agriculture Today, and we start our Friday show with a grain market update from K-State grain economist Daniel O'Brien and the senior economist at the IGP Institute at K-State, Guy Allen. Daniel, Guy, I appreciate you both taking the time to join us today.
Thank you very much, Shelby.
Today, wanting to look at some market reactions we had from reports we saw a week ago. And Daniel, starting off with wheat, what are we seeing domestically?
Well, not a lot of bullishness in the market at this time. That we came out of that report and had seen the USDA make well come forward with an increase in the yield per acre for the U.S. and again, this is following after the September small grain summary report. So more evidence had come in from USDA NASS, National Ag Statistics Service, and led them to increase yields. Small change in acreage up from 36.6 up to 37.2. So a little bit higher yield, a little bit more acreage, harvested acreage, pardon me, and ended up and raised production about 58 million bushels. Nothing much else changed in the supply and demand balance sheet for U.S. wheat, with again exports still at 900 million bushels, and ending stocks did increase from 844 million bushels by 57 million up to 901. The price projected by the USDA down about a dime from 5.10 to $5. Stocks to use at a 41% in the September report. Over 2 months' time, basically accumulated evidence to put us up closer to about 43.9%. So not a lot positive. Saw no changes though in export figures for hard red winter wheat or for hard red spring. Hard red still at 325 million. And it's interesting to see some of the U.S. export figures as some of that as we recover from the government shutdown and see the USDA handle their data through time, and now they're up to October the 2nd, basically advanced 2 weeks from that last report that they had on the 18th of September. And even with that, you've got hard red winter wheat. Well, hard red winter wheat running it in the last report that we had at about 11.3 million bushels. Needed about little over 5 to meet the USDA's trend. Well, the projection of 325 million bushels. So again, we'll be playing catch up from now until basically the first of the year in terms of that data. My question that I had with the government shutdown and this data that was going to be released was whether, again, a primary one had to do with whether we could maintain a pretty strong pace of U.S. wheat exports overall and hard red in particular. And it looks like, at least so far with what the evidence is that we've seen, that we've maintained that. I would say it, Guy, kind of just a couple comments on the world's stocks to use for wheat. Saw really no changes in stocks to use that are of tremendous importance. You did see so 2 years ago, the 23-24 marketing year, world stocks 34%, 32%, 24-25, and now this one that we're in projected in November at 33, and world less China up at about 21%. So really look at the last 3 marketing years, no major changes, nothing to shake things up. And so I guess the overall supply demand landscape in aggregate hasn't changed much. Guy, what about some of the specifics?
Yeah, we did tighten the ending stocks up a little bit, but look, the trade was expecting it to be a bit more tighter. So because it missed the trade expectation, it was basically a bearish report. Looking at the world wheat production number, 25-26 production, world production was pegged at just under 829 million metric tons. That's up actually 12.7 million tons from September, and up 3.5% from a year ago. And as I sort of run through these countries, they're all slightly bigger number. The Australia crop increased 1.5 million tons to 36 million metric tons compared to 34.1 a year ago. Argentina was up 2.5 million tons from 2 months ago to 22. It was 18.5 last year. Russia production was up 86.5 million metric tons, up 1.5 million. Exports, though, were actually lowered for Russia, 1 million tons to 44. Ukraine production left unchanged. European production increased 2.2 million tons to 142.3. Canadian production was up 1 million tons at 37 versus just under 36 in September. China's was steady at 140 million metric tons, and imports were left unchanged on that. So just bigger general production numbers around the world is really what's hanging on this wheat market. And all those numbers were above what the trade expectations were.
When we're thinking about trade, Guy, how has transportation and the US dollar been looking?
Well, to start with the U.S. dollar, since 2 months ago, we've seen the Aussie dollar, the U.S. dollar index rally from about 97.5 up to just above 100 on the index. When the currency shows a bit of strength like that, that does weigh on U.S. commodity prices and its competitiveness around the world. Switching over to transportation, just on domestic transportation, we have seen barge freight break a bit, which sort of indicates harvest is pretty much over through the Corn Belt, particularly across the river states. We do continue to see a record corn export program, which is keeping it firm, but it has come down off those harvest highs. And that tells me most of this crop is now put away, and with the carries on the boards, probably sitting in pretty tight hands in the country elevators. Similarly, rail freight has broke as well on the UP rail lines. Rail cars are bid option price with maybe 200 offer. And the BN still a bit of a premium there, but it's below 1,000. It's bid about 500, offered about 600 per car. So rail freight's coming down. Internationally on the dry bulk, we've seen dry bulk index come up to an 18-month high. A lot of that, I think, is being driven not so much by grains, but we're seeing China buy a bit more iron ore and coal. Coal and iron ore account for about 2/3 of the volume in that dry bulk index, which grain has to compete with that in order to get transportation. So that's what we're seeing from a logistical side of things.
And if I could mention, there is something else that happened during this time frame of the break from the government shutdown, and that's again the U.S. and China negotiations came to an end. Generally positive news with the hope of more exports for corn, pardon me, for U.S. soybeans and hopefully for grain sorghum as well. Guy, in my quarters, I've been watching the numbers. We've had some movement there, not a lot. The basis hasn't changed a lot, although I do see a few cash price bids now, just one or two in South Central Kansas, the key export terminals. You'll see bids jump 20, 30 cents above companion elevators around the area. So that's a sign of some potential movement coming in. Any thoughts that you'd have on that before we go to a break, Guy?
Well, just on China particularly, it was good to see them come to a more friendly arrangement there. They're still waiting for some of the details. We have seen China buy some soybeans, but not as much as maybe we were hoping. Wheat purchases have been
Anemic.
lacking, and the corn production has or corn purchase has been disappointing there as well. We have seen a little bit of corn shipments and a little bit of sorghum there as well. So hopefully we'll work through that. So we'll see. I think the market wants to see the actual sales, but also they want to see the grain actually be shipped. So we'll see how that comes about.
Yeah,
In
and go ahead, Shelby. Sorry.
No, in past conversations, Daniel, we've talked a lot about are farmers choosing to store their grain or sell their grain, and did we see any changes with this report?
And really, that follows, Guy, just what you talked about. A lot of grain in pretty tight hands. I think there's an aspect of psychology involved and financial need in that when we've been through recent hard price lows, and since we're talking about wheat, wheat futures had gotten down as low as well in late October, about 475 thereabouts, jumped up to 540, now dropped dropped on Thursday down to 506 for a close. That's hard red winter wheat, the Dees contract. So in a situation like that, we tend to see people after having had at least a moderate high and falling off of that, then when you get a rise afterwards, you're more inclined to probably sell. So for those, but that only happens for those that have coming up end of the year cash flow needs. They want to make sure they move some grain. So you get human psychology coming into play, um, and basically you get it starts to impact the movement of grain out of storage. Anything that was put in commercial storage, of course, tends to move quicker just because of the higher cost of doing it. On-farm storage can tend to be just as you mentioned, more bulletproof, tied in, locked down for the long-term wait, looking out into spring of next year, unless there's a big surprise that could come. Guy, any comments on that?
Yeah, no, I think you're right there, Dan. I think the farmers have got it put away. They probably got everything sold they need to cash flow themselves through Christmas holiday, and they're probably going on vacation between Thanksgiving and Christmas, I'd say. Country elevator, I would say most of those guys have their hedges rolled out to May or even July. Again, it's going to be in pretty tight hands, and they're going to have to see a basis a move in that to shake that loose. So it should be a better year for the country elevator than we've seen for a while, which is good. But it's just wait and see. If we see the export programs continue, particularly on corn, that's where I think we'll see it happen first.
Just real quick, Guy, when you say export programs, what do you mean?
Well, we watch the lineup, the export lineup every week on how many ships are presenting themselves to load. We watch the volume of grain in the export pipeline, particularly along the river, and that export program they need to match up. And we'll talk about this after the break. Is corn exports have been at record levels, so that's a good note.
That was the senior economist at the IGP Institute, Guy Allen, and he was joined by K-State grain economist Daniel O'Brien. We're cutting to a short break, but when we come back, we'll once again be joined by Guy and Daniel as we continue our grain market conversation.